Keith, my favorite tweet about your move was am I to believe that Keith Rabois has joined the NBA? You definitely set Twitter aflutter with this news. Why the big jump to Founders Fund?
Well, as you know, I started my career in Silicon Valley in technology, working for Peter, and I basically quote something that Peter taught me every day of my life to somebody. And in fact,
Like, give me an example.
The primary principle that I learned from Peter that has actually really propelled my career, both as an executive, as an entrepreneur, and as an investor, is that you have to find undiscovered talent, and that you can't build a career, you can't build a startup by processing the same people in the same way that everybody else does. And so I learned that in November 2000, my first week at PayPal, and I've sort of learned how to apply that to identify talent, assess talent, and groom talent across the last 18 years. And so doubling down on that, going back sort of to my roots and working with Peter again is really exciting. Plus, every single person that works at Founders Fund as a partner is somebody that's a friend of mine or an associate or principal or somebody I've recruited over my career. So being able to work with everybody who's like a friend was a fascinating opportunity that pretty unprecedented, actually.
Was there something you weren't happy with at Khosla?
No, as we've discussed, I was at Khosla for 6 years, led many investments, probably about 20, 25 investments. Vinod was on my board at Square, David Wyden was on my board at Slide, so I had a KV partner on my board for 7 years in a row. It was a great experience. Obviously, I don't like commuting to Menlo Park. It's become more painful. I live in the city. I think the center of gravity has moved to the city. Even Y Combinator is hosting its first demo day in San Francisco for the first time in March. So I just prefer to be in San Francisco.
You mentioned the center of gravity moving to the city, but like Peter Thiel has moved to LA, and you've got all these investors saying, the future's outside of Silicon Valley.
Yeah, I disagree with that. He's moved to LA, but Founders Fund is based in San Francisco, and as far as I know, we'll be staying in San Francisco. The critical density, to create a PayPal, you need a critical density of talent, and you need to hold this critical density of talent together for a sustained period of time. The critical densities of talent are still mostly here. You can certainly build outrageously successful companies elsewhere, but it's very difficult to do that. Here, in any field, whether it's design, marketing, business development, engineering, you can find extraordinary people that know how to scale a company. That's very difficult to do in other geos.
So you think investing in other cities is a tough sell?
I think it is. I mean, for me, one of the reasons why I like to invest in Silicon Valley is I'm very actively involved in most of the companies I back. And I've found that as geographic distance expands, my ability to influence the company contracts. And so I prefer to be at offices that I can go visit every week if necessary.
Speaking of, you've got 14 or 15 board seats?
Something like that.
So what happens to the board seats you racked up while you were at Khosla?
It's not yet resolved. We'll discuss it on Monday and figure out what the best path forward is.
So what's your strategy in 2019? We're in the middle of a trade war. There's political and economic uncertainty. And I've even heard some investors say there's not a lot of exciting startups right now, believe it or not.
Well, I disagree with the last. There's a lot of very exciting startups if you know where to look. I think if you look in the same places that people looked 5 or 10 years ago, they may not feel that exciting. But at the frontier of technology, there's a lot of interesting innovation going on in healthcare, in space. There's definitely a lot of raw material. So what I like to do and what I focus on is very early stage investing, like the proverbial 2 kids in a garage that have a ridiculous idea and have some absurd notion that they're going to take over the world. And I think those companies are very insulated from what the current macro environments are because it's a 5 to 15-year journey from today. So I'm going to continue to lead investments at the very, very beginning of the company's trajectories, whether it's denominated as a seed stage investment or a Series A. But that's what I like to do.
So what's your strategy? I mean, are there specific sectors that you have your eye on?
No, I'm not a sector or thesis-driven investor. I'm a people-driven investor, founder-driven investor. So really, it's the spark from an individual or a spark from a team that they communicate to me and convinces me and persuades me that there's a different future in some vertical, and then I'm along for the ride.
How important is diversity for you when you're looking for people?
Diversity, I think absolutely the most important thing is that someone has what Peter calls secrets. So to be successful in starting a company from scratch in an industry that has a lot of incumbents, and a lot of power, and a lot of money, one has to have a projection of the future that nobody else agrees with that turns out to be insightful. So I think that diversity of ideas is absolutely indispensable to success. If one were to just follow the conventional wisdom, there's no way anybody would start any of these companies. The idea that Tesla, for example, would be the most important auto manufacturer in the world in Silicon Valley with no experience anywhere in auto manufacturing would have seemed crazy in 2005. But in fact, every review of every automobile in the world ranks Tesla as the single best product. So I think that's true in any field, that outrageous people with ambition and with different ideas can actually conquer the world.
Now, there are many, many people who work at Founders Fund aside from Peter Thiel, but Peter Thiel gets a lot of the attention, a disproportionate amount of the attention, made waves by supporting President Trump, which was, again, a contrarian bet that, not a lot of people in Silicon Valley agreed with. Do you think that Trump has hurt or helped Silicon Valley at all in his term? I mean, what has been the impact of the Trump administration on tech?
I think there's some pros and cons. The FDA has become a more progressive institution, is more innovative, more innovation friendly. I think everybody agrees with that. It's been harder on immigration, which has propelled most of Silicon Valley's success for the last 40 years. Something like 60% of all important companies founded in Silicon Valley over the last 40 years have a first-generation immigrant as a co-founder. So I think the restriction of immigration is pretty controversial. The debate and the confrontation on China on trade is actually probably split 50-50. I think about half of the people in Silicon Valley think it's a really good idea to push back on China, and about the other half are a little bit more establishment in their thinking about China. So that one's proven to be, and it diverges across ideological spectrum. It's actually interesting. I have a lot of liberal friends who think confronting China is the right thing to do, and I have a lot of conservative friends who think it's not the right thing to do. So that's actually been an interesting divide. So it's a mixed scoreboard.
Now, if I remember correctly, you didn't vote, right?
Correct.
Is anybody catching your eye this time around, or a Trump re-election?
Well,
I know this is not about politics, but I'm always really curious what you're thinking.
I'll be a Nikki Haley supporter when she runs for president. I don't know what year that's going to be.
Okay. So we're expecting a big tech IPO market this year. What's your outlook, including Lyft, which you invested in before it was Lyft?
Yep.
How do you think the various companies are going to perform?
Well, I think there's a lot of great companies that have been built over the last decade. Airbnb, Lyft are certainly some of them. There'll be others. And I think that, my view has always been that companies should IPO early in their trajectory and early in their careers. I wrote a whole chapter in the High Growth Handbook about why. Me and Bill Gurley are really the two proponents of IPOs. So it's nice to see these companies going public sooner rather than later. If it's up to me, a bunch of companies I've invested in would go public sooner rather than later, but we'll see. I don't always win those debates.
And how do you think about Lyft versus Uber?
Well, I think Lyft, I've been on this program many times. Several years ago, lots of people were predicting the death of Lyft, and I was on here explaining why Lyft was going to be successful. I think people overestimated the network effect in that business. So in any city in the United States, as long as you can get a car within 3 to 4 minutes, there is no network effect. So you have to get enough supply so that you can satisfy demand within roughly 3 to 5 minutes, but after that, it's diminishing marginal returns. So Uber's been distracted with all these international adventures where they basically lost money, and Lyft's used that time to build their supply across almost every American city, and Lyft's going to be very successful.
Have you found that Softbank bringing in these massive amounts of money to Silicon Valley, is it changing the game for you? And do you like this?
Well, I don't think money is a great solution for most startups. I think enough money, enough oxygen to prove that you're right, that you have product market fit is critical and indispensable. But I don't think money solves problems for startups. It usually creates more problems than it solves. If you're really right about the direction of the world and you have a value proposition that resonates with lots of people, money isn't that critical.
So do you think Softbank could be messing things up?
Yes, I think a lot of companies are not disciplined and they spend money when it's available. When the price of capital is too cheap, it actually creates a distortion like any other product. And historically, over the last 3 to 7 years, the price of late-stage capital has been fairly inexpensive. It's almost like if oxygen is free, you don't think about consuming oxygen. If every time you had to take a breath, you had to pay for it, you'd be judicious about where you're going for a run. And when you were going for a run.
Okay, so then what happens in 5 years?
I think what happens in 5 years is
fail, or
well, I think a lot of these companies will
Softbank
fail.
doesn't make money. What?
Yeah, I don't think SoftBank's returns are going to be exceptional. I think the Journal just broke a story, criticizing SoftBank from an investor standpoint. I've criticized SoftBank more from a moral or philosophical standpoint, but I think the returns will be pretty subprime over at SoftBank because they're powering money into companies, and money isn't the solution. If money was the solution, Microsoft would have dominated the last 20 years. Google would be dominating the next 20 years. Apple would always be dominating, but that's not true. Apple is on the precipice of bankruptcy.
What are the moral issues?
Well, the moral issues are most of the money, somewhere between 60 and 80%, comes from Saudi Arabia. Obviously, in Saudi Arabia, it's illegal to be gay. It explicitly discriminates against women in many dimensions. It's anti-Semitic, et cetera, funds terrorists across the globe. So I think taking money from people who are up to no good is not necessarily the best thing. I'm proud of the LPs I've worked with at Khosla Ventures. They're typically endowments, major universities, major hospitals, and at some point in your life, you want to make money for people who are up to interesting things and having positive impact in society versus making money for people who are propelling, an archaic future.